Don't you sometimes feel like you're in the wrong industry? Sure, Bitcoin's been up more than 38% in 2025, but tech stocks like Nvidia up more than 50%, Palantir 200%. While the world is slowly waking up to the fact that crypto is here to stay, over 90% of tokens will probably die by the next cycle, while stocks with real-world products will still be around. Now stick around to the end of this video as we break down the real score here. You see, for decades, owning stocks has been the gold standard of investing. The S&P 500 has historically returned about 10% a year, comfortably beating the average 2.6 inflation rate over the past 20 years. Now, sure, that sounds pretty boring compared to, putting $1,000 into some dog coin and watching it go to billions, right? But that doesn't happen very often, even in crypto. And recently the tables have turned. While we're waiting for some kind of altcoin mania to happen again, some of the coins to finally go back to at least previous all-time highs, man, let alone new highs. Big tech stocks are setting new record thanks to the AI meta. Microsoft hit an all-time high in July, returning about 35% since January. That's almost identical to Bitcoin's returns. Google's up around 36% this year. Nvidia nearly 60%. Palantir, which barely anyone talked about a few years ago, has absolutely exploded, proving that yes, indeed, evil does prevail. Fucking Palantir. Anyway, it's crazy stuff. It's almost up 200% since January, about 500% from a year ago. Meanwhile, we're still praying for Ethereum to crack $5,000, and it's had a good run and it's still up relatively strong compared to the lows of the year. And it's not just price action for stocks. Some tech stocks pay real dividends. Microsoft, for example, has got a pretty pathetic one at 0.67%, which means for every $100 invested, you just get 67 cents per year, which is not very much, but at least it's something, okay? Most crypto coins don't offer anything based on a real business model. I know that they got staking, but then you have to deal with the inflation from that. There's also the theory that crypto's famous 4-year cycle may be dead, making tops and bottoms thus harder to predict. For many investors, that makes stocks just look more attractive by comparison. There's cooler shit going on, robotics and AI, real AI companies, real robotics companies, not just crypto fugazi bullshit. And if you're risk averse, of course, bonds are back on the menu too with halfway decent returns. The new Genius Act essentially lays the legal groundwork for stablecoins, and what backs those stablecoins? Well, by law, high quality liquid reserve assets. And what are the safest, most liquid assets? US Treasuries. That means stablecoin issuers could soon be the biggest holders of Uncle Sam's IOUs. Translation, the US dollar isn't going anywhere. Good news for Tradfi. Crypto, anyway, at least we're gonna get more money on chain. That's gonna be a big positive, I think. We'll get trillions on chain from the stablecoin flood. Dollars, man. Anyway, guys, if you want to trade the cryptocurrency market, the question is, will you start taking your trading seriously? Will you go to an exchange that treats you right? Will you go to an exchange that has incredible incentives for you? That place is called BitUnix. I'm doing a lot of my futures trading over there these days. If you want to join me, guess what? It's never been a better time. Link down below. Deep liquidity, no KYC, no VPN, available everywhere. That means for you, okay? You can sign up there. You can trade there. Link's right down here. When you sign up, you're going to get 30% off your trading fees, a $400 deposit bonus when you deposit $2,000 or more. Insane trading fees. Basically, the more you trade, the more money there's stuff back in your pockets. And for the rest of the month of September, when we're doing a live stream, you're also going to get a chance to win $1,000. Check it out. Link down below. So anyway, back to this. Look, dollar's not dying. Stocks are doing good. Does that mean it's time to go full TradFi boomer mode? Nah, I mean, look, it's true that Palantir, Microsoft, Nvidia, Tesla, stuff like this might look more enticing compared to buying dog coins or microcaps, and that's true, but it's like comparing apples to, well, not even oranges, apples to dog shit. Anyway, a more appropriate example is comparing the S&P 500's top stocks with crypto's top 10 or top 20. For example, BNB has a 62% return from its January lows to its all-time high that was reached just recently. If stocks have Palantir, crypto has hype from its January low. It made over 200% return when it reached its all-time high this year. The year-to-date returns on the top-performing S&P 500 are nothing to scoff at. It's true, and there's a lot of cool shit going on in stocks, which is why I own a lot of stocks. I like stocks, don't get me wrong. The top 100 returns range from 50 to over 200%, but let's be honest, 200% is a walk in the park for altcoins, let alone 50%, even if altcoins have long periods where they do nothing. Take a look at Aster. It registered over 300% gains since the 19th, which is crazy. If you got in earlier, you could have got even more money out of it, of course. It now has over a $3 billion market cap. And this is, of course, a decentralized exchange backed by Binance. And don't get me started with meme coins, okay? Both stocks and crypto have their own versions of fundraising. IPOs for companies, ICOs for token. But here's the twist. Many newer crypto projects are more and more being often fair launched with no pre-allocation or insider advantage. Now, there's a whole shit ton of that going on too, don't get me wrong. But at least we're seeing a move towards more of that in crypto. Now, I've never seen a Stock IPO, of course, doesn't have shit tons of insiders, and there should be insiders. You know, these ideas need early funding and shit like that. It's easy to shit on the whole model, but it does have its purposes. Anyway, comparing stocks to crypto is hardly fair, but let's just give it a shot. Take the number 5 stock in the S&P 500, which is Amazon, versus Solana, which is also number 5 minus stablecoins. If you bought in 2024 and sold at the September 2025 high, Amazon would have given you a solid 38% return. But Solana, the same trade, would have doubled your money, 100% gains. If we line things up by market cap, Amazon and Bitcoin are both in the $2 trillion range over that same period from September 2024 to 2025 September. Bitcoin crushes Amazon with 117% returns. Perspective, right? The problem is that crypto is so much more volatile than stocks. I mean, stocks have volatility too, but crypto really takes the cake. And of course, sometimes it correlates, sometimes you don't. That's the problem. Watch stocks grinding new highs, crypto's doing dick all. And I know most of you watching don't need convincing that crypto is one of the best shots of building wealth, but let's try to lay it out here for you. Take the barrier to entry. For example, in the US, the pattern day trading rule forces stock traders to keep at least $25,000 in equity before they can day trade. In crypto, you can start with a little $10. Well, I believe Bitcoin will eventually be worth $1 million. There's no rule saying that we should only hold one asset. Diversification makes sense. Personally, I keep most of my wealth on chain in Bitcoin, secured with a hardware wallet, by the way, but dipping a toe into stocks, I love it. I got a whole bunch of stocks and I keep buying more. In fact, at most of my profits that I'm making in the cryptocurrency markets, I'm taking out and putting into the stock market. Doesn't mean I'm leaving crypto forever or anything like that, just that when the profits happen there, take it and put it somewhere else. Crypto's a great place to make money and lose money. Other places are better for potentially storing it, except for Bitcoin. That's a different story. But just imagine if you picked up MicroStrategy stock back in 2023. Sure, it's 30% off its all-time highs, but you'd still be up over 2,500% today. Coinbase, over 1,100% gains since 2023, with over 80% this year alone. Robinhood up 240% year-to-date. One of my best purchases this year actually was buying a shit ton of Robinhood back in April. In fact, in April, I cut some of my altcoin bags. We talked about that here, and bought stuff like Robinhood and Tesla, which have largely outperformed the altcoin bags that I cut. It's been that bad of a year for altcoins. And here's the bigger picture. The real payoffs come from long-term holding, not chasing high-risk short-term plays. Okay, just like early investors of Bitcoin or Ethereum or Solana, those who stuck it through the insane volatility saw life-changing returns. That same principle is starting to play out with newer projects too, and as crypto matures, more and more investors will treat it the same way they treat stocks, because we'll get more and more professional shit happening in crypto too. Think about it. Why do you buy a stock? Not just for the returns, but because you believe in the company's products and services. I mean, returns too, but you're not going to invest in an idea you think stupid, are you? Right? I invest in data centers, I invest in energy, I invest in AI and robotics and all that kind of stuff because it makes sense to me. I like it, it's cool. The same logic is starting to apply to crypto. Take Ethereum. The new Genius Act finally gave stablecoins a legal framework. And what powers stablecoins? Smart contracts. Ethereum's a specialty, of course, but Solana also plays in the same arena, offering faster throughput. Chainlink with CCIP is literally connecting private bank chains with public blockchains to settle tokenized assets. Nerds. Decentralized exchanges are another frontier, of course. Projects like Hype and Aster building for that future. While Wall Street is obsessed with AI, crypto has honestly too many AI plays to name, from AI agents to AI infrastructure to decentralized GPU networks and on and on and on. And yeah, stock's been having a great run, multiple new all-time highs this year for the stock market. But crypto is no longer just a speculative game. It's laying down the financial rails, the infrastructure, and even the AI backbone of the future. Walking away now would be like dumping internet stocks in the early 2000s because you thought that the internet had peaked. History didn't reward the safe choice back then, and it rarely rewards the safe choice, and it won't this time either. Hear me now, quote me later. The best times for the cryptocurrency markets are still ahead of us. Most people still have no exposure, and most people will have exposure by the end of the decade, right? So think about what you can do long term. Don't take too many risks. Stay focused. You can win this game. Thanks for watching.